Hello everyone and welcome on this new weekly DXY analysis from Xtreme Trader. This is Salah speaking. Before we start, please don't forget to hit the like button and subscribe to the channel and kindly leave a comment and share the video. Also, I'm very happy and proud to share with you that our last DXY analysis has actually went almost as predicted. So as you can see, the reversal has occurred just one pip away from the entry. However, it's important to remind you that we don't really trade this pair. We just use it to trade the USD pairs such as EURUSD, GBPUSD, AUDUSD and USDCAD. Also, it actually kissed our TP as well. So thankfully, another successful prediction from Xtreme Trader. But of course, it's very important to remind you guys that we never promise any results. And just because this prediction has went well, doesn't mean at all that the next one is gonna go well as well. Okay, let's now delete the whole thing. Now, before also we start, it's important to remind you that this coming Wednesday, we have a lot of news that might actually make an impact on this very analysis. So we have the federal rate cuts, we have the FOMC statements, and all of them, my friends, might make an impact on the DXY or the US dollar index. However, we're actually expecting a continuation in the fall. Why? Because most likely we're actually looking for increase in the interest rate cuts, okay, by 0.25%, and that makes it a total of 4% for this year. An interest rate cut means a DXY is going to be weaker, is going to get the DXY to get lower. Why? Because it actually helps the gold to be bullish. DXY is going to be bearish because increasing the interest rates, meaning lowering the returns of the investors who actually have invested money in the DXY, which actually might make them leave it to look for another asset that can actually brings more yields. Therefore, I would actually assume that the DXY most likely is going to be bearish for this week. Let's now look at the weekly chart. Oops. Alright, so now the weekly chart for the DXY. We actually just need to figure the next candle. So because of course we're talking about the weekly candle, right? So from my point of view and from my understanding of the price action, the next candle most likely is going to be bearish. Why, Salah? For a simple reason. Number one is right here. We actually have a long-term support trend line that indeed has just been broken out from. Number two, the market has actually failed to respect the previous level of a resistance right here exactly. So as we can see, here we of course had a broken level of a resistance, as we can see. And we actually have no attempt of a support right here, guys, at all. So the market actually has just simply respected the previous level of a resistance, but did not create a new support at all, and instead it just kept falling. That being said, weekly chart suggests a continuation in the bearish fall. So now by moving to daily chart, let me just show it to you. As you can see, my friends, also we have right here a support level, which actually has been broken out from with this bearish breakout candle. And that actually increases our chances with the fall. However, we have to pay attention to the resistance right here. Most likely the DXY will continue the rise to respect this level of a previous resistance, and from there it's going to continue the fall. Add into the mix that we actually right here had, of course, a support trend line number one, support trend line number two, and as we can see, we can actually expect from the DXY to continue the rise a little bit more, again to respect the previous level of a resistance and then resume the fall. That being said, I would strongly recommend to consider selling the DXY exactly at 99.454. But however, for a less confirmation, as we can see right here, we can apply the Fibonacci retracement from this lower low to this higher high, and as we can see, it almost matching with our with the Fibonacci 38.2. So sorry, 23.6, sorry, I mean 23.6. So let me just lower my entry to be exactly right here. Whoops, 1 second. I would like to lower my entry to be exactly at Fibonacci 23.6. Now, if we sell from that point, I'm actually expecting from the DXY to continue the fall, at least to retest the previous level of a support right here exactly at 97.991. Why? Well, because as you can see, we actually have right here, my friends, have as a broken level of a supported trend line. So now the normal behavior of the market, if it actually creates a supported trend line and makes the bearish breakout from it, most likely it tends to continue the fall to reach the Fibonacci 61.8 retracement, which is the key level of a support, and from that point it might actually start the bullish reversal to retest the broken level of a supported trend line. So for those reasons, I would actually assume that we can sell the DXY exactly at 99.403, aiming 97.991, which means we actually aim around, let me just see, 140 pips with this signal. However, in this case, our stop loss shouldn't actually exceed the previous level of a resistance right here exactly at 99.994, because if the pair is going to be able to reach this level, meaning it doesn't actually respect the previous level of resistance at all. Let me now please write the signal for you. And that will be all, my friends, for this analysis. Hopefully it's going to be going well, and hopefully it will be beneficial to all of us. And in the end, of course, don't forget please to join our free channel of Telegram to receive any updates about these signals that you are receiving here on YouTube. The channel name is Xtreme Trader Signals, and you can just simply find the link in the description below of this video. Please join this channel to stay connected to Xtreme Trader to receive all the updates out of YouTube. In the end, I hope that was informative to you, and I would like to thank you for watching.